What's up, everybody? Welcome to another edition of Zach's Live Trader. Here with you, as always, I am the bearded boy wonder, Dave Bartosiak. And today, my friends, it's JPMorgan Chase, ticker JPM. So again, we're going to do this screen grab style because, frankly, I can get you guys a lot more information. And who wants to see my grizzly face anyway? So we're going to do it this way for the rest of the week. Don't forget, tomorrow we're going to have the morning after, as I like to call it. So that is a morning session where we're going to look at the immediate impact of earnings results on JPMorgan because they're going to report before the market opens tomorrow, I believe. And then we also have a little update from yesterday's video on Pier 1 because they're going to report after the bell today. So you got those two. We're going to talk about it, do a live little question and answer session like we did last week. I thought it went very well. I had a lot of participation from you guys, and everything was cool. So I like that. So we're going to do that again. Then later in the day tomorrow, I've got the good, the bad, and the ugly weekly trade review. So we can't forget about that one. And then after that, tomorrow we're going to do Netflix, right? That's right, because Good Friday, the market's closed, so we're going to do Netflix. So tomorrow we got a lot going on. Now, normally that morning session is just going to be for the premium folks, but I'm just feeling generous, and since it's the beginning and I want to get a lot of feedback, I'm going to open that up to everybody. So it's going to be free for everyone tomorrow's session. I hope you guys can all join. And if you're not already hooked up with Live Trader Premium, shoot me those emails, livetrader@zax.com. We'll make sure we get you connected with the premium because otherwise you won't be able to see Netflix. You won't get any of the weekly trade review, and this will be the only time you're going to get to see the Q&A. So, all right, now that all that's out of the way, let's take a look at JPMorgan Chase. So, as always, kick things off with the price consensus and EPS surprise chart here on zax.com. Black line corresponds to the right y-axis, which is the price. Then you have these multicolored lines, which represent the evolution of our Zax consensus estimates over time. The green arrows are earnings beats. The red arrows are earnings misses. And one thing you'll note here, aside from this kind of huge green arrow here in 2015, where there was a big, or 2012 rather, where there was a big surprise, most of the time, JPMorgan is going to be within a few cents of EPS. It's a huge bank. What sort of surprises could they possibly have, right? That's part of it. Also, they do a very good job of managing analyst and investor expectations heading into these numbers. So overall, you're not going to get huge surprises one way or the other. Here's the interesting thing, though, is that we have these trends in EPS that can suddenly reverse and go the other way. Trends and reversals. Now, I don't know how much you guys remember about 2013, 2014, 2015, but there was a lot of banking scandals going on. A lot of penalties that JPMorgan and the other very large banks were paying as a result of the mortgage crisis / debacle / whatever it is you want to call it, right? So there were these huge write-downs they were taking, and they were, writing these big checks to the DOJ and whoever else was penalizing them. So some weird stuff going on. But now if you notice through 2014, 2015, even 2016, it's the same thing. Like, oh, the growth is going to happen. It's going to be good. No, they were going to have a growth in it. No, we're going to no. Okay, so lots of promises of growth that they just didn't deliver on until about September of this last year. Now all of a sudden these are ticking up, okay? A major part of bank earnings is that net interest margin. So that's the difference on the amount that they pay out to their deposit holders and the amount that they get back on loans that they make, right? So the spread between the two. That's the juice that they get to keep. So it gets better as interest rates rise. So banks do well in this sort of environment. What you've got to ask yourself is it $56 to $90 good in 1 year? Has it changed that much? Has the game changed that much for JPMorgan Chase? I don't know. And I'm going to throw out a quick question here. Remember, guys, there's a little bit of a delay here, but who do you guys bank with? Who do you bank with, right? So, for example, like I bank with Chase. I bank with Chase and a credit union, right? So I'm just wondering, you don't have to, if it's too personal or whatever, I know people get weird about that stuff. You don't have to tell me, but I just wondered, I just want to take a quick poll, find out what you guys, are saying. Because essentially, most of the people that I know, they either bank with JPMorgan, Wells, Kurt. It's like JPMorgan, Wells, Bank of America. That's it, right? That's what I hear 90% of the time. I don't hear too much. I just started the credit union recently because they gave me a really nice rate. They gave me a really BMO, huh? I used to work for BMO back in the day. Anyway, so here we go, right? So we got some credit unions. Yeah, I think there's this push going back towards the credit union because it's actually how banks used to be. Now, back in the day, before banks got all you're just a number, you used to be able to. There was like a board of directors at this bank, and they would make the decisions on your loans. So think of like It's a Wonderful Life, right? Where he's like, oh, and then it's in your house. Oh, it's in your house, right? I mean, that's how it was. They would invest in the community. You would bring your money on deposit there, and then they would make decisions not based on some number, your credit score, or something silly. It was actual relationship that would grow over time. I think credit unions are kind of a little bit more like that now. And I'm not making a huge pitch for credit unions or anything. I'm just saying. All right, so let's look at the detailed estimates page here on Zacks.com. See, it's a Zacks rank number 3 hold right now. Going to report before the market opens tomorrow. We already knew that. That's why I did this a little earlier. Now, how are the banks faring? They're in the top 21% of our Zacks industry rank right now. So that's good. Look at the revenue growth here at JPMorgan. 5.7% here in the current quarter. Only 1.7 next quarter. Current year number 4.97. Next year number is going to look like 5.88. If we look at the EPS, it's even better. Current quarter 12.02. Next quarter, though. So what's up with next quarter? We're going to have a little down quarter next quarter? Is that what we're talking about? And then current year, 5.9%. Next year, 15.15%. Next year, it's going to be better, right? They always say this. Very optimistic for next year. Who's been making these? Look at this. Over the last 60 days, 8 analysts came out and dropped their estimates for the current quarter. 4 have done so in the last 30 days. Over the last week, though, you do have one brave soul who's come out an increase. Granted, you have somebody that came out and dropped their number 2. Next quarter, kind of neutral on next quarter over the last week, but then over the last 30 days, you have 3 analysts that have dropped for the next quarter. Current year numbers, a little bit of negativity here for the current year. Next year, a little bit of positivity, right? Oh, I guess I suppose this is more positive, right? I just see that there's 2 analysts over the last 60 days, and okay, so what is this? What has this done to our overall Zacks consensus estimates? 90 days ago, we were looking for $1.57. Now we're just looking for $1.51. Next quarter, we were looking for $1.62, $1.63, $1.62. Current year numbers 648 up to 656. Next year, 720 up to 755. So really, the next year is where it's going to kick in. And then if you look at the most recent surprise, big surprise last quarter, 29 cents. Quarter before, 18, 12, 9. Lots of surprises in a row. All right, now we got to bust out the big guns, boys. Boom. What's happened as a result of these earnings reports? A whole lot of nada. Last quarter, 29-cent beat. The stock moves 53 bips. Quarter before, 12% beat. Stock moves to the downside 84 bips. 8% beat, 1.6. Blah, 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 right? Not a lot. Not a lot. And even if you go back further, I don't see, do I see anything over 3? Let's see. Sorry, I went back too far. 3% there is the biggest move. There's a -6 in December of 2014. March, up 5. So it's been a little bit, but not much, right? Just kind of inching back and forth. Not too much going on there. Revenues. Have revenues been in line? you see, yeah, revenue for the most part, I mean, pretty much in line. Percentage-wise, not a major surprise. So maybe that's what it is, right? More looking at the revenue versus that EPS. You know, I love looking at our historical Zacks rankiness on this, as it is a 3 right now. Let's let this pull up and see what it is. And a little bit of bearishness here in Q1 of 2016. Then it got a little bullish, and then now we're kind of neutral, right? Kind of neutral. We could judge that pretty much from the price consensus and EPS surprise chart anyway. Let's look. Oh, the yen. Man, don't get me started on the yen, guys. It was a rough night last night for you, boy. All right, let's go back to JPMorgan Chase. Let's go to the dailies, and we'll see here a little bit of negativity recently. See this? It's come under the 50-day moving average. Came back up to it, got rejected again as the commodity channel index went from oversold to the 0 line and touched it. This is a continuation pattern that I like to play in the opposite direction. What I mean by that is oftentimes, let's see if we can find one just as an example. I suppose this is kind of an example, right? Where it goes from overbought, comes down, touches the 0 line, and then continues on its pace. Stock moves higher. This is the opposite. It's below the 0 line, touches it, and comes down. So this is negative here for shares of JPMorgan Chase. And obviously you could see short-term sort of trend channel in the negative direction. You had a positive channel that has since been broken, right? And I'm sure we can draw nicer lines than this to illustrate this, and I will do so using the tools available here on free stock charts. I'll let you guys see this. I don't even know what this is, a regression channel. Okay. Let me just show you this. A little bit more straight line kind of stuff that I can do here. So you do have a longer term sort of trend line that's developed there. A trend line across the tops. And then this channel is moving downwards here. So that sort of puts us right around here, right? 81s. 81s. Angry-faced 81s, right? This is the JPMorgan technical trader being upset right now because that's what's happening, okay? It doesn't look like it's working out. This is working out. Kurt asked, what percentage of my trading is Forex? Of the trading or of the total value of my life? Because I have a very small account that I trade Forex and futures with, because really it's more of a hobby because I end up losing money all the time. I'll trade great for a little bit and then I'll trade big and it'll blow up in my face. So as far as my actual trading of Forex, it's probably 25 to maybe even 50% of my life is trading Forex. Just because of how time consuming it is, because I do it basically just to sharpen the saw, because it's very technical. So it's very fun for me. It's a hobby, to be honest with you, more than an actual, making money trading, making serious money trading rather. Okay, so another thing with this, I want to draw a quick fib retracement. Look who's 50%, 81s. 81s. 81 is jumping off the page at me right now, okay? So keep 81s in mind when we're looking at JPMorgan Chase. All right, so let's look at the options chain, shall we? Get this side by side. It's trading 85 and change. Let's go ahead and highlight the 85s. There we go. Pull up our handy dandy calculator. At the money call, 119. At the money put, 75. It's $1.94. Divide that by the $85 holler. We're looking for a 2.28% move here in shares of JPMorgan. Not a big move, right? Certainly not a big move. But here's something that's mildly entertaining to me, is sort of the skew of these, right? How far you can go and there's still some action. It's only about $3, so there's not a lot of skew here either. Now, what I mean by that skew, essentially, is if anybody ever took a stats class, right, you have your sort of normal distribution of probabilities. So let's say that the middle here is 85, right? And then you have your standard deviations that are out here, right? Okay? So, like, can I draw a sigma here without looking weird? Anyway, so then this number would be, one standard deviation above or below. And again, I'm just eyeballing this thing. So you call this like 82 and then 88, right? So then the vast number of the probability is within these two, right? So like 88% of the values or whatever it is. I forget what the numbers are. I forgot all my stats class. But a big chunk of the numbers are going to be explained by what's happening between these two. And then out here, you have a much lower probability out here. Who's in the stats class? I forgot my empirical rule. Oh, man. So my teacher, I can see my teacher just nodding his head or just shaking his head in shame. I know it was like 90, 95, and 99. I can't remember if that's 2, 3, and 4 standard deviations out or 1, 2, and 3. Of course, nobody's going to answer me, right? That's okay. I'll Google it later. Okay, let's get back to JPMorgan Chase. So that's what I meant by skew. You have that kind of normal distribution, right? I guess I'll go back to my class that I was doing. So then most of it, right, is within here. But then these goalpost numbers can change. So sometimes this is flatter, right? And then so it takes further out to define or to like encompass that all those probabilities. Right? Does that make sense? So it's kind of flattened out a little bit. And you see that sometimes in the options chain where it'll be more expensive further out of the money. Okay? Now, you don't really have that situation here with JPMorgan. All right. So let's move to the stacked view. And as much as we love doing the front week options or even the front month, do we really want to come in here and look at JPMorgan Chase and say, yeah, this is going to move in 2 days? Let's give it a little bit of time. Remember, we're doing this analysis based on earnings and post-earnings drift. So let's go ahead and go out to the monthly expiration for May and construct these. Okay? So there we go. 68, 95, 99. I said, what did I say, 88 the first time? Thank you. Thank you for that, the empirical. 68, 95, 99. I always forget, man. I'm getting rusty, Well, it's been a while since I've been in stats class. Okay. Now I'm not going to forget that. 68, 95, 99. All right. Where was I? What were my levels? 81 was my level to the downside that I liked. We know that the market was just pricing in $2, so 83s. So I'm going to come out here and say if we give it a little bit more time, market's wrong. And then to the upside, you got to believe maybe it gets to half of the high. What's this? 87s, 89s? What's the swing high here? The swing high here is 89.46. So let's use 81 and 89. Of course, we're not going to get an $81 strike here, right? But we will get 80s. And we will get 90s. All right, so bulls first. Bulls. And the reason why I'm even going long a call spread here and long a put spread, because I think that the options market's underpricing this a little bit. Yes, I know. Dave, are you crazy? Your consolidated surprise page that you looked at showed us that it barely moves over the last couple days. Exactly. Barely moves in the couple days immediately following. But that doesn't mean it doesn't trend a little bit in that direction over time. And we are giving this one a couple more weeks. So I think it could go, if this thing gets bullish, it could go all the way to 90. But do I want to risk that? That's 87. No, I don't want to risk that. Okay. Now, if you're bullish here on JPMorgan, You can go long this 85, 87.50. So it's going to cost you $280 for the $85 call. Simultaneously go short the 87.50. You're going to get back in $1.58. So that's 122 you're going to have at risk here. So your break even is going to be 86.22. Okay. Now, the amount of money that you can make is the difference in the strike prices, which is 250 minus that 122. So you're talking about 128 on 122. You can basically double up on this a little bit more. Shares of JPMorgan Chase would have to close at or above 87.50 at expiration. Now, why did I say 87.50 and not go with the 80, with the 90 rather, right? Because the 90 is just that much further out. And if you guys have been watching this a while, you know that I like to cheat and just go kind of half of what I really think will happen, right? I do that a lot. And also when you do the math here, it's 280. I'm going to stop putting the decimal in because it wastes my time. 280 if you were long the 85. If you shorted the 90, you're going to get back 80 cents. So you'll have 200 at risk here. Difference in the strike prices here is $5. So you can make 300 on 200. You'll make 150%, right? So I can double up or I can make 150%. Is that extra 50% worth it for me to have an extra, 80 cents at risk? Okay. In this case, 80 cents represents, or it's 78 cents, right, on 122. That's an extra 64% of risk that I'm going to have. So do I want to risk 64% more of my money for potentially 50% more return? No, I don't. Okay. So officially, bull trade is long May 21st. Is this May 21st? Let me double check this date first of all before I go. May 19th. Sorry, guys. May 19th. 85, 87.50 call spread for 122. Is that what it is? 122 net debit. Okay, that's the bull case. Now the bearish case, you can do the 87.50s here, but I'm gonna do the 85s. And these I'm going to be more bold all the way down to 81. I'm going to be bold on the bear side because of sort of what I believe is a difference in the expectation. I was looking at, let me see if I can still find it. Here, I'm going to pull this up for you. It's not here now. Of course it's not here now because I want to talk about it. When I was on the homepage of Yahoo Finance, 10 minutes ago, number one thing up here was talking about how great the banking stocks earnings is going to be. Of course, it's not here now. Anyway, it was all about how great how great earnings are going to be. Now, if you remember, last quarter, I was very bullish on oil stocks in general. And it was because of this guy right here, my boss. He issues this report once a week, which is pretty awesome, that I always look at, that tells us the expected quarterly earnings growth on various sectors. Now, the finance sector overall for this quarter is expecting 5.4% EPS growth, with smaller banks, it looks like, set to do 16.1%, right? I love that this is what Shiraz is saying. Please note the major banks industry, which include JPMorgan, accounts for roughly 45% of the sector's total earnings. And if you look major banks here, he's only expecting 20 bips. 20 bips of EPS growth is what he's expecting out of the major banks, right? But we already know that the expectations are priced in for these guys to do very well, right? So I think if they come out and they disappoint, it's going to be ugly. Yeah, David saw that in the Wall Street Journal too, where everybody's all like, yeah, bank earnings are going to be awesome. Now, I don't know. So I think if you're going to be bearish, you can be bearish in a big way. So I'm using the highlighter I found. There we go. I found out my magic little pen has a highlighter option and then a regular option. Okay. So we do the 85. Of course, now I'm off by 1. There we go. So the 85.80 put spread. Let's do the math on this bad boy. So it's going to cost $225 for the 85 put to go long. Now subtract what you're going to get for selling the 80 put, which is 81 cents. So you got 144 at risk. Now the difference in the strike prices here is $5 minus that 144. You've got the upside potential of 356 on an investment of 144. That, my friends, is righteous, right? So you can make a ton of money on this. You can more than triple up on this if shares of JPMorgan were to close at or below $80 at expiration in May. So the bear case here, the bear trade is long May 21st, May 19th. I'm going to do that for 3 or 4 days, guaranteed. I think because April was the 21st, so it's just stuck in my head. Long, the May 19th, 85.80 put spread for a 144 net debit. That's the bear trade, okay? Got the bullish trade, got the bearish trade, right? All right, folks. So, in the case of JPMorgan Chase, which one of these do I believe is going to end up panning out for us? I got to go with the Bears. Got to go with the Bears. I don't think that they're going to meet these expectations. And this is all going to come all at once in the middle of the night, right? And here's another thing. VIX. The VIX is up, right? Somebody's freaking out a little bit. Risk off is happening in the yen trade. This is risk off, guys. The yen strengthening. And here's another thing. Gold at 1275. Futures got over like 1280, I think. Gold is charging higher. Interest rates are going down. We are at the lowest rate on the 10-year since mid-November, okay? There is some serious risk-off action that's taking place in this market. We might be getting railroaded tomorrow with these banks. So what's my lotto ticket? Not the week of, a week after. The week after, 82s. Oh, how did this get so skinny? Where's the pen? I messed this all up. There we go. 82s. Wow, that was actually too big, but that's okay. There's the lotto. 82s. It's a very aggressive trade for this. So, lotto. April 21st. That time I got it right. 82 put, 35-cent net debit. All right? So there's my case here for Chase, for what I think is going to end up panning out here based on this earnings report, based on our little technical analysis that we've got going on, based on everything, guys. So, again, thank you so much for hanging out with me here today on Zach's Live Trader. If you're not already hooked up with Premium, shoot me those emails, livetrader@zax.com. I will get you connected. That free 14-day trial. And it's only $10 a month after that. And honestly, I only do it to prove that it can be done to Zax. So they believe. So anyway, that's all I got for you today. Remember, tomorrow we're going to do that live session the morning after. That's going to be 9 a.m. I want to give the market a half hour after the open to kind of digest what it's going to do. Then we're going to have the good, the bad, and the ugly review. Then we're going to have Netflix. So all that and more coming up tomorrow. So thank you guys so much for hanging out with me today, and I will see you all very soon. Have a good one.